Hello, it's Amy and Adam here from EriksensGlobal, and we have released another monthly economic commentary, which means another video from us to talk about something fascinating that's happened in the markets. So in the United States, we have learned that the May and June labour market data was downwardly revised, which was quite surprising. And then in July, we saw that unemployment had ticked up a little bit. So not great, but what then happened is President Donald Trump, I should say, he fired the head of the Bureau of Labourstatistics, who is the department who kind of published a lot of this data. So when this happens, it obviously causes a bit of a disruption to markets. But what are we seeing looking forward? Tell us.
Well, I think it's pretty much always bad when we see elected officials firing independent policymakers. And one of the big things that we're going to really need to kind of wait and see on is who Trump appoints as a permanent replacement. Now, we're really going to see a little bit of trouble if that appointment is one that creates problems or questions around the integrity of the data that we get at the Bureau of Labour Statistics. That's something which just complicates the lives of all of those market participants, you and I included, who like to look at their data to understand what's going on in the world.
Yes, we kind of need it to be reliable to do investment analysis, really.
Absolutely. And while we're talking about firing, another person that Trump has been recently pretty keen to fire has been the Fed Chair Jerome Powell.
Poor guy.
If he was actually to go through on that, that's the kind of thing which would be a bit more catastrophic. Firing Powell is the kind of thing that would call into question the independence of the Fed's monetary policy. And that in turn is the sort of thing that can reduce confidence in the ability of the Fed to keep inflation in check.
There goes the risk-free rate that they taught us about in uni.
Precisely. That's when you start to see things like sell-offs in US bond markets and just generally speaking an increase to US borrowing costs.
Indeed. So there's a lot more exciting stuff like that. And we're also going to look back at what happened across the month in our economic commentary. So click the link below if you want to read more, and we will see you next time. Bye.
See ya.